what you mean is you wanted to have seen something like this and then price takes this, right?
100%, yes, sir.
Okay, that was what you wanted to see. Okay, this was what we saw, right? So let's get back to how did we even mark those stuffs? Let's see. Back to the daily. So from the daily, okay, let's keep this 4-hour levels in the 4-hour. Now what we can see from it is we can see we had this open close price that was broken through by Monday's delivery to the downside, but then volume still closed above it because also we had reaction from the bullish fair value gap here. Okay, let's look at it. Let's look at it together. Let's start from beginning because I want you to get it. So let's say we are going back to, that should be Wednesday. All right, this is it. We're aiming for sell side. This is an open close price level. First, this came into this bullish fair value gap. This is the institutional order flow, the flow before the push. It coincides with the mean threshold and then push. So it means the fair value gap was respected, this key level, which we saw in the 4-hour time frame. Let me show you from the 4-hour. You can see that level is this bullish order block where price came to and pushed to the upside. That's supposed to show you. I'm coming. I want the lines to show so that you see it. So 4-hour. So in the 4, I can see that was a bullish block that gave us this bullish movement, but then price came, broke through it. So that was when we started looking at the possible zones where we could anticipate the bearish continuation, because we established from the weekly time frame that we are bearish. So all we are paying attention to is the bearish side of things, because the lower time frame is not even giving us a reason to say we want to jump bullish yet. So once we identify that daily level, so inside that daily level, we have this open close price here in the 4-hour time frame, which then I showed us with I pointed it out to you with this inversion. So you can see we have this inversion fair value gap, this inversion here. Okay, because price is trading, you see, first price came to be traded above as though price was going to respect it, but then the next candle disrespected that, trading bearish. So you can see price kept falling. So the possibility now next is to anticipate a price could come back to it, and then we have the bearish fall since we've identified a draw on liquidity. So here is a daily level. We refine the daily level into this 4-hour open close price level, which is almost in confluence with the mean threshold of this inversion fair value gap. So let's do it with this. So that was where we marked this 4-hour level, and this was the next refined 4-hour level for this daily level. Let's see that daily level for this breaker level, because this is the sell movement before the buy that took out buy side. Price fell, broke through it. So this is also a killer because this traded above it. Now volume is coming back to it, and we are strongly bearish. So we have to identify where could price react from. So it is either price dips much more higher, goes much more higher here and then falls to the downside, or it trades to this level and falls. Why this level? Because it's a key level. We had a bullish order block there in the 4-hour time frame, and volume has gone below it, so it could go back and act as a reclaim block, and then price would continue falling to the downside. So because of the bearish volume, is the reason why I said price may not come here. We may see that reaction here. So patience is important, because price now could decide to violate this and gets to this and then before the fall. But then you have to identify the probable levels, zones that the reaction could happen at, and that was what we now did. So in the 4-hour time frame, we now refined it to this 4-hour open close price, which is almost in confluence to the mean threshold of the inversion. So that was why I said now we can do it with the daily level. Since it has been refined, let it just be in the daily time frame. So price could just react at that daily and not come to the 4-hour and then continue bearish, but then we want to work with the refined level. So this established from the 4-hour time frame. So it means we have this level and this level to look out for, and the level at the high point took out this buy side liquidity. So it means if this doesn't hold, we could look at seeing price reacting here, because also this reaction happened here. this opposing open close price where we had this pullback before the push that took this high and fell. That is a key level that was broken, and then price retested it. In lower time frame, this created a structure where we saw the breaker. So reaction from the breaker points. So that is now a 4-hour level. This one here. So before we had the sweep of this buy side, let's look at that. Buy side price fell. So we've already established now what we are looking at. Sell from here, or we could see price come here before the sell. 1 hour time frame, let's look at that. So 1 hour time frame, we saw a peak here, more of a rejection high points here. You can see here you have a liquidity resting here. Price could seek this liquidity, come here, react, or price could seek this as a much more stronger liquidity to react here before falling. So that is why I said we always have to wait to see how Asia session delivers. So price could seek this, react from here and fall. Price could further seek this. Change that to the line graph. You clearly see that. Could seek this before falling to the downside. So back to the candlestick. So you can see that breaker level where the reaction happened, bearish fall. So we are looking at now bearish possibilities to the downside because the story is telling us we are bearish. So with this established, we'll be looking forward to where can you target as your take profits. You may not necessarily have to target the sell side. The next target can be the rejection level. Please hope we're following. Are we together?
Yes, boss.
Yes, sir.
All right. So it can be these targets. Do I just have to repeat it? I want clarity. So to the 1 hour time frame, we already established where we could see reaction, where we want to take the profits. So let's see how Asia session delivers, and then we'll begin to look at London and then New York session. London, I said I like to look at that from 1 a.m. New York time zone, but then the Q zone is at 2. So 1 a.m. because 2 a.m. New York time zone, that is 7 a.m. London. Yeah. So the 3.
So during this time you were looking for sales.
Yes.
So but we have this imbalance not inversed. So why were you looking for sales? I'm talking about the last imbalance in 1 hour time frame.
That is why I said which frame tells you a stronger story.
Higher time frame.
Higher time. Now, what is 4 hours?
Yes, sir.
Let's go to the 4 hour.
Inversion of
Yeah.
fair value gap.
Showing you the inversion. That other fair value
Yes.
seen in 1 hour is within this 4 hour candle week. You're getting it?
Order block. Yes. Yes.
But the 4 hours inverse. The 4 hour, the higher time frame is much more stronger than a lower time frame. You get it?
Yes.
Yeah, the higher time frame story is much more valid than a lower. The lower time frame is a refinement of a higher time frame story. You get it?
Yes.
Just the way I refine these levels, I refine the daily in the 4 hour. So higher time frame is much more powerful than the lower time frame. So this is like we're looking at it, the top down analysis. What did 4 hour tell you? Work with 4 hour. And what is the weekly telling you? We are bearish. What is the daily telling you? We are bearish, right? And if
Yes.
it's here, look at it here. If you're using trend line, you are still bearish. You're seeing it, you are still bearish. Let's say you're using trend line.
Trend line liquidity building. Yes. Yes.
You are still bearish. So we are not jumping into anything bullish yet till it tells us that yes, we are bullish. So now this is it. Okay, let me show you this again. From the 4 hour, let's even look at the 4 hour. You have this, right? You have this here.
Yes, sir.
And then this other one again. You have it here.
Yes, sir.
So why should I be bullish? When this bearish fair value gap, your price came to invalidate it, but now price is trading below it. What should I be bullish? Are you getting it?
The only mistake I did, I didn't pay attention to 4 hour time frame. It has already inversed this bullish fair value gap. I was on 1 hour time frame, and there I saw one last hope of fair value gap. Bullish fair value gap is not inversed. From there I will look for buys. That's the mistake I did.
Okay, I get it. So that's why I said it's not like you don't know it. It's just that so much information and it can cause neglecting a possible outcome that may happen. You get it? So that's why If you should check
Yes.
it from a lower time frame, try to see what is the higher time frame telling you.
Yes, sir. 100%.
Yeah, so that is why now I'm still holding on to the bearish side of things. And when you come to daily time frame, let's go to the daily. There is no reason to really be bullish because this is giving us bearish volume. Look at, you can see Tuesday took out what? This Monday's buy side. You get it? So if this was supposed to be bullish, then this movement should not have violated this kind of crazy rejection we had. You get it? So change
100%.
that to the line graph. You can see this low was broken. Change that to the line graph. It shows you this low
Yes.
taken out. So the line graph,
This low was taken out and
so the line chart shows you the close price. It shows you the close price. So it shows us that where's the drawn liquidity? This is the drawn liquidity. This is the weekly level. Check the weekly time frame. When we go to the weekly, it's going to show us the full fulfillment, but no problem. Let's just see. You can see this is the weekly open close price. We are looking forward to see how
wow.
here. You get it? This is the weekly open close price. This is the monthly. I did the top down showing those that were here earlier. What you can see is that it took out this previous month buy side before the bearish movement to the downside. Took out this low, further went and broke structure to the downside. You can see broke this structure. So price, all of this movement that happened from 2022 was like a pullback to come back to this source that took out this. So price came back to this, and you can see what happened. Price had respected that whole close price level. What you can see, further manipulation, price went to the monthly page, added up to seek this equal lows. Because this took out this high, it created equal highs. I said lows, equal highs into the monthly bearish fair value gap. More manipulation. But what can you see? Volume, extension to volume.
Did not close
Straight
exactly
below this. Change it to line graph. Volume is straight below it. You can see. Volume is below.
failure swing.
So volume is trading below it. Sorry, back to the monthly. Sorry, I went to the weekly. Sorry. So back to the candlestick. So volume is trading below it. And I also checked, first, while we built the bearish, we also look at what dollar index was seeing. So you can see this candle came again back into this, and then again close back. So for us to be bullish, it means that price should trade back to a bullish level. So we came to the weekly time frame. I'll just do it very fast. So in the weekly time frame, we saw that monthly zone. What can you see? Buy move before the sell move. Equal highs. That was why price here manipulated much more higher to take out these words, equal highs. So in 1 hour, your confusion now happened where, let's say this one, sorry, let's identify that. That's this one here.
1.1 yes sir, 1.16750.
All right.
Exactly.
Yes. So even if then this is going to hold, you are not supposed to just be bullish then. I think I explained that. I said then you should wait for this to at least break this. To break, look, maybe a proper start targeting to see maybe coming to this buy side, and possibly
Exactly.
this bullish start to the bearish
Inducement.
before maybe this, right? You would have waited first to see that it takes up this. So don't just jump immediately into
Plus, it changes instead of delivering.
This candle also inverse this 1 hour imbalance where your arrow is right now, the green candle.
the green candle.
This also inverse this. Yes. The place your arrow is
Okay.
earlier.
This one is
1.17 000.
1 point
Right side.
1.1
1.17 000.
1.1 sorry 1.17 000.
Yes. This imbalance will also inverse.
Okay, I get what you're saying.
That was my confirmation to go for longs. Yes.
This one,
Exactly. This small one.
which small one? My God, I'm not seeing it though. Which one?
The small one. The area where you have also marked the line.
Okay, wait, this one.
Okay.
Yes, this imbalance, sell side imbalance, it also got inverse candle close above it.
Okay, this one here.
Yes,
Okay. Okay, this one here. Okay, you expected to see price now comes up.
yes,
Okay. Okay, I get it.
yes, sir.
But now this is it. This is the last buy movement, and you can see this took out buy side. That is why I said when you find something in a lower time frame, go to the higher time frame and see what's happening. You get it, sir?
Yes, sir,
So you
100%.
need to check that. You need to check that. So now we are still bearish because we can see what the daily is telling us. So we've refined the daily, this and also this. So now what we need now to do is to look at how the delivery is going to happen. Basically now maybe you consider also with your sessions. Now 1 hour time frame, we marked that, okay, this is London Houston. I marked from 1 a.m. but ideally 2 a.m. I like to check it 1 hour before the time. So I don't know, it's clear to you?
Yes, sir.